What's up everybody? Michael Silva here with my sidekick Coco to do some technical analysis on the S&P 500. We're going to be looking at the daily time frame, the 30-minute time frame, going to map out support, resistance, and kind of just follow up on yesterday's video. Let's get into it. All right, everybody, welcome back. We are here on the daily time frame, going to do some technical analysis here on the SPX. Now, it looked like earlier in the day, the price action was kind of moving down towards the bottom of what we've been calling this rising wedge pattern. And then it kind of just from that point started moving higher throughout the day. Now, when we get into the 30-minute time frame, we're going to look more as to why I think it has some more space to move up just a little bit, probably this 3,200 area, just because of how the price action played out intraday. These are bearish patterns, okay? And a bearish pattern running into a massive area of resistance, you know, that's a sign that we might see some sort of a pullback. It looked like the price struggled right around 3180 to close the gap here on the island reversal. Now, another little trend line that you could point out that would make sense is from the top here in February, and you trend it down like that to the top of this island reversal. If you look at that middle candle right here, just yesterday's candle, it came up to the top, which happened to be the top of our trend line for the rising wedge. It's also the top of the trend line for this moving downwards. So there's just a lot of different resistance. You know, X marks the spot apparently right here. So there could be a lot of treasure hiding out in this range of 3,200. Who knows? Guess we'll see. Ultimately, on the daily time frame, it looks like the price is going to just kind of stick within this channel, you know, from the 3,000 to the 3,230 range for a little bit longer. It's going to be interesting to see, you know, when it breaks out of this. I think volatility is going to be obviously increasing here in the near future. We have some earnings coming up here in the next week or so. So that typically brings on more volatility. I've been asked, you know, well, what do you think is going to take place in the earnings? Well, honestly, you know, I think that when you get poor jobs reports, the market would go down, but it's not the case. And I feel like a lot of people are already understanding that there could be poor earnings coming out. So I just don't think it's going to have that much of a dramatic effect on the market. It might, but, you know, it's just my hunch thinking that, you know, even if it's horrible earnings, people are going to be like, yeah, well, it's just because of this. And, you know, don't need to worry about it because things will recover. I still really think that this is kind of like a buy the dip, sell the rip type of market, and we're kind of moving into that ripped territory. And if it could come down to 3,000, which seems to be building a strong base, we actually talked yesterday about the moving averages crossing over right here, and the moving average is crossing over at a very important area. It's at that 3,000 range, so this can be building more support right around this range and moving higher. So I definitely think that if this is a rising wedge pattern and it actually holds true, we can probably see a pullback to 3,100. That would make sense because 3,100 is right, you know, right here. Maybe you hang it a little bit lower down to like 3050, 3020, which we talked about in other videos. You know, this range here. So if it pulls back within this range and then might move higher. Another little type of pattern-ish thing that I see taking place right now is potentially this could be somewhat of a descending triangle coiling up, or potentially even a triangle pattern coiling up here like so. So, well, like if you take a look at that, notice how the price kind of came from this lower part of our bulls camp, came all the way up, touched here, bounced down, kind of came around this 150 range, came back down to test it, and then now it's hitting the top of this range here too. So this could be a tightly coiling triangle for eventually a stronger move. So if that really is the case, then, you know, we might see this coil up within this range till August. So something to take note of. Now that's obviously early on that pattern, just like I was really early on this rising wedge pattern. It's just things to take note of, right? We're reading charts right now. That's what we do. Somebody called me out the other day on moving averages and saying that they're a lagging indicator. I'm like, well, yeah, everything that we're looking at is a lagging indicator. I mean, we're looking at price action that happened up to months ago, right? These trend lines going way back. And the thing is, that's how you read charts, and that's how you predict future moves is you have to look at lagging indicators, and you have to look at previous price action and current price action to predict and forecast where you think the price is going to go. If there was a holy grail, then I guess this would be just a significantly a lot easier. So when you have things like this take place, you need to take note, because you need ideals in your favor for either if it's a bear or a bull type of strategy that you're going up against. And if you have a chart right now between bears and bulls, I mean, it's pretty darn even for the most part. I mean, the bulls have a lot in their favor. They have one bullish context of the chart. They have the crossover taking place. They have a strong base here at 3,000. However, the bears, you got this rising wedge pattern. You got a lot of resistance up ahead. You have this island reversal pattern that it can't quite get above yet. So there's a lot of things in either direction, which just to me says, hey, there's no clear direction as to where the price is going. Maybe you should hold off on significant trades until we have some confirmation as to where the price can go. So yeah, today was a pretty nice day. It pulled back, hit the bottom part of this trend line, and then started moving higher and pretty much closed on the high of the day. The bulls were looking pretty strong. Now, it looked like the bears were really strong yesterday, and then it gapped up. So a lot of head fakes, a lot of fake outs, but it looks like the price is just trying to get up to that 3,200. And if it does, man, this rising wedge is looking very strong because it has a lot of pivot points, right? You have the top here, the bottom here, the top here, the bottom there. If we get another top and another bottom, this could really be a pretty significant, flash boom down to the downside, if it holds, right, true to its pattern. So that is the daily time frame kind of update for the day. Let's hop into the 30-minute time frame so we can follow up on the support and resistance areas that we mapped out yesterday and see if there's anything that's changed. All right, so we are here on the 30-minute time frame. This blue vertical line right here is where the day started. I'm gonna go ahead and remove that just to kind of clean up the screen. These red lines were some areas of resistance that we mapped out yesterday, and then we have the support down here. And now we're gonna change some things up just to give an update and walk you kind of through what took place. So yesterday, the price action was right down here. We put an area of support right around in this area. And the next day, today, it gapped up and then moved higher up throughout the day. Now came into this area of resistance, this 3165 that we're kind of calling a zone, right? We call it a zone up into this range, I think 3165 to 3170. And it did get hung up right in that exact range. Notice if you look in the previous history of the chart, you have it acting as support through these candlesticks right here. And then it got rejected and moved lower. Now that's a big aggressive move, right? So you have a very bullish move to start, and then the bears just like came in and crushed the price all the way down to that 3140 level, which we were talking about support, which means that it closed the window from the previous day on July 2nd. On July 6th, it gapped up. And typically when windows become open or gaps happen, it leaves areas for the chart to come back and eventually fill them. And that's what took place today. A big bearish move to the downside filled the window and then started moving higher throughout basically the rest of the day. For a while it went sideways, and then for the last 2 hours it kind of moved up. Now look at the interaction on this purple trend line, which was the rising wedge. It looks like it kind of held this 3150 area. The price was just kind of didn't know where to go with it, right? So you have it, it broke out, then it came to back test it. And then it was just all over the place, to be quite honest. It opened back up here, and then it closed down here. It was very confusing price, and that's what I mean by it was a very volatile day. But ultimately, in the last 2 hours of trading, the price really started to rocket higher. And now, if we were to update this, these areas right here, this is now going to be a support. Right? It got above 3165, so now it is a support. And then this area, the 3150, is now going to be support as well. And now as far as areas of resistance go, the 3182 is still going to hold. And now we're looking at this interesting area of resistance, which is going to be the 3170, basically right where the price closed. So if I were to clean this chart up a little bit, I'd probably get rid of this 3140 support right here. Now, you can keep it in your mind because it's still kind of active, but because the price action moved up this far, I'm going to just hold on to 3150 and 3165 as support. And then as far as resistance goes, we're going to have it 3182, which is the top right here. And then we have the 3170, which is pretty much right where the price closed and you know, it acted as resistance here and it acted as support throughout here. So technically it is a resistance still. Now if it breaks through this, I think it's that 3200, so we can keep a line up there, or just remember that 3200 is a big area, and that's right where this trend line is up here. So you know, the price looks strong throughout the remainder of the day. So do we see this move higher in one day, or will it take a couple of days and then eventually come back down? I guess it's anybody's guess, but at this point in time, the price action, if it closes and gets above 3170, the next area to take out is 3182. So you know, play it by ear. Just keep an eye on these areas. I wouldn't technically go long at 3182, but I potentially would go long if it closes above it and breaks up to the upside to maybe quick intraday trade. And then I would be very hesitant up at 3200, because that is a significant area. If we get above 3200, yeah, and we close above it and we're up above it for a couple of days there, yeah, I don't see why we couldn't go to 3400 and meet the new market high. But it's, like I said, a lot of resistance in this area. So just like, be very careful, manage your risk. When you're placing on trades, make sure that your risk versus reward is 3-to-1, or, you know, 2-to-1, you know, whatever you technically feel comfortable with, but don't risk a lot, like hundreds and hundreds of dollars to potentially earn, you know, 50 bucks. It doesn't make sense. And eventually, you know, it might work, you know, 10 times, but the one time that it doesn't, it'll really crush a portfolio. The last thing that I want to point out is the indicator right down here. The MACD looks like it's crossing over. Nothing too significant at this particular point in time, but it is something to note. So that is all I have for you on this technical analysis update on the S&P 500. See you tomorrow.